International Equity Allocator. Developed markets. In North America, Canada continues to be underweighted. Canada continues to be underweighted with middle-of-the-road valuations relative to other markets and negative terms of trade trend based on lower export prices relative to import prices. Japan continues to be overweighted with other developed Asian markets underweighted. Japan continues to be overweighted, not due to cheap valuations, but it looks attractive on our other investment categories. Australia is underweighted with its weak terms of trade trend and many downgrades to earnings estimates. Hong Kong continues to be underweighted with its trailing price-to-earnings ratio high relative to its own 10-year average and with weak 12-month price momentum. Continental Europe is substantially overweighted. Ireland is overweighted based on large upgrades to forecasted 2023 GDP growth over the last 6 months, strong 12-month price momentum, and large declines in growth of domestic credit as a percent of GDP over the past 5 years. Overweighted Italy, Norway, Spain, and Austria are very inexpensive markets. Italy and Spain are also attractive on our growth indicators with upward revisions to forecasted 2023 GDP and earnings forecasts. We have reduced Germany's weight to an underweight. Its valuations are not particularly cheap, and there are more downward revisions than upward revisions to earnings estimates. UK continues to be market-weighted. GDP forecasts for 2023, while still weak, have been upgraded by 110 basis points over the last 6 months. The negatives include high short-term interest rates as inflation stays high and weak price momentum. Emerging markets. Emerging Asia is underweighted. China is marginally underweighted. Valuations are not particularly cheap. On the positive side, its terms of trade trend, commodity export prices relative to import prices, is positive. Taiwan is underweighted with more downward earnings estimate revisions than upward. Korea stays underweighted with its trailing price to earnings higher than its 10-year average. India is also underweighted with valuations, which are expensive on an absolute basis and relative to its own history. Emerging Europe, Middle East, Africa is overweighted. Turkey continues to be overweight based on cheap valuations, a sharp decline in sovereign spreads following the elections, and a very undervalued real exchange rate. As stated over the last several months, despite our disciplined framework, we urge caution. Poland is also overweighted with cheap valuations and strong 12-month momentum. South Africa is underweighted. It continues to have a negative terms of trade trend and large downgrades to forecasted 2023 GDP. We have increased our Latin American allocation with an overweight in Brazil. We have increased Brazil to an overweight as it has come out of our value trap category. It continues to have inexpensive valuations along with strong 12-month momentum. Chile and Colombia are both out of our value trap category this month as well, but are not overweighted with weak 12-month price momentum. Mexico is underweighted as its exchange rate remains overvalued.